let's look at the rest of the big boys. So here's Amazon. So if you wanted to take a head, I'm gonna answer the questions that I started out with. Is if you're long, what should you do? If you're short, what should you do? If you're net neutral, what should you do? If you're short, this might be, or if you believe in the long-term narrative, this might be one of the best charts, because if you look at what Amazon is doing, just on the daily chart alone, it found some support down in here. Took a while as it broke through its weekly 100, but it found some support. It started making a series of higher highs and higher lows. It filled this gap, just about filled it, pulled back, held, and now has had a reversal candle, confirmation candle. So it is moving higher. The RSI just crossed over the 50% level. Even though you are sort of still in a reddish, cycle here, this looks like it could upturn green. The 3-to-1 compression could fire long. Really interesting, right? And if I look at the weekly chart, you might find some resistance here at the daily 50, but that's not until you get to about 219, and it'll continue to rise, 219 or 220. So is there a short-term trade here like the 215, 220? And you could do it for this Friday. If you wanted to go out to the 27th, you could. This is pretty good, pretty much a solid bullish play as you try to get a retest of these levels. This actually looks halfway decent. Yeah, so Edmondson, if you have Amazon as a hedge, because we talked about it a while ago, 30 days out. So two things. Number one, when you do hedges like that against a short portfolio, don't go too far out. Because what will happen is, if you were right about your initial assessment, let's just say you bought puts on other things, and you go, all right, you know what, I need a hedge. So I'm going to go ahead and buy some of this 30 days out, all the way out to here, 30 days, as a hedge. Okay. And so, you're up a little bit. But what if your initial thesis was correct, and this does start to come to fruition, and Amazon comes back down? All of your profits that you're sitting on now get wiped out due to theta decay, because every day you hold and every week you hold, it just gets worse and worse in terms of theta. And if your initial analysis was right and the market does turn over, you won't get any of that money. So the way to do it correctly is if your main position is bearish and you got puts on the market for April or end of March or whatever it is, let's just call it April, right? And you want this as a hedge, then you got to put the hedge on for this Friday and for next Friday, so that if you get a move to this Friday, you close that trade and take the money. Because then if next week your thesis is correct and it does roll over, the hedge served its purpose. And now you can take this money and do one of two things: average down at that moment, or if right now, Edmondson, you feel like your puts are just a little too close, you got some for the 20th or maybe the 27th, and now the price has been moving away from you, like on the Qs. Let's say you got the 590 puts on the Qs, and now the Qs are at 602. And maybe they go up to 605. Even if it reverses in your direction, look how far you've got to go. You're too far away. You're too close and too far away. So you might need to roll your trades further out and change the strikes and move them up. That's going to cost money. Where do you get the money to do that? Short-term hedge. Do you understand? Yeah, but you don't want to think that way. You're putting on Amazon as a hedge, or you're gambling that the war will be over and the markets will pop. So if you're gambling the war will be over and the markets will pop by then you're a gambler. Don't do that. If you are in fact using it as a hedge, as I have taught you, and I know that you know this, your hedges should be short-term in nature, so that if we get the moves that we're getting like this week, you take that money and you use that money to readjust your strikes because now you might be too far away. Maybe you're not. Fortunately for the way I placed my SPY trades, which we're going to go over in a minute, I'm right at the money. I am not far out I may be far out on the Qs, but I'm not far out on the SPY. The SPY is sitting literally right at the strikes. And I've given myself to the 27th and beyond, and I'm right at the strikes. I don't need to roll my SPY, and I don't need to move the strikes. I may need to do that with the Qs. I'm a little close on the Qs. So where am I going to get the money to finance moving my Qs to next week and upping the strikes from where, let's say I've got them at 590. I'm like, oh, I don't like that at all. Let me see if I can move these up to 595. That's going to cost money, and rolling them to the following week, that's going to cost money. Maybe I put on an Amazon trade or a Bitcoin or a Coinbase trade or a GDX trade, because if the dollar goes down, gold will go up potentially, to bring in some money this week. And that helps finance this adjustment. That's what I'm getting to in this session. As the main theme here is, if you're net short, what do you do here if your strikes are getting too far away from you and your expiration date is too close? I'm going to get to that, so just stick with me here. So this could be one of those trades that you use for this Friday. Maybe the 215, 217 half if they have them, or the 215, 220, or the 217, 222 half, or something like that for this Friday. Just boom, 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 boom. If you just get one pop between now and Friday, this thing makes money. Little out of the money, pop, bang, take that money, and now you can use it to either average down on your shorts because you don't think, the level was hit, and now it's reversing back down on Friday, and so you want to double down, better price, great, you can use it for that. Or like I said, if your strikes are too far away, and you need more time, and need to roll the trade, you can use the money for that. Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.